Welcome to StockMarketFunding.com. It's a wonderful day. 12/6/2011. Geithner is in Europe. All of the European central bankers are behind doors right now, figuring how are they going to fix a problem that is not fixable. And the thing about it is, we're going to go with the S&P 500 after hours daily market recap. 200-day simple moving average on this daily chart is where the S&P, once again, until we get above there. What I will show is that this diagonal trend line from the top of that last reversal, we're on the outside, the right side, which is the upside of that trend line. Now, having said that, the very same trend line, which is right, so let me take out this one. This very same trend line from those lows down here that come up and connect right through here is where you got on the this side of the market, where we made the lows at 1150 in the S&P, and we've come up roughly over another 100 points. Just as we've done since August, we've been in these ranges like this. They're all volatility trades, of course. So until we close above it, up above that trend line right here, that's the top of where the last secondary reversal came. First reversal, second reversal, first reversal is going to be the upper end of the resistance. This first reversal of where that top went straight down, that's where we're going to struggle with the market. Until we can consolidate above here and hold it. And what do I mean by that? You got to stay above the 200-day simple moving average. And as far as the chart goes and all of that, it looks okay. But I'm sorry to tell you, I'm on the other side. It's time to get net short going into January. So we will take advantage of the upper moves just like we did. We went long here. When we got up at the top, we got on that put side and it paid. Same thing here for the month of January, folks. Going to get paid big when that S&P goes down. Dow Jones, look at this top. Look at that. This is where the original low was. We made that high, reversal 1, reversal 2, and we're coming right back up to these tops. Granted that you're right here at major resistance. Until I'm above this high point of that reversal and consolidate, I can't make it to 12.5. And I will tell you another thing. During all of the austerity, financial crises, is that volatility is volatility. And on this Dow, I'm going to draw a trend line for you, MMPs, and it's going to go right here, just like it should. Right there is 12.5. From the bottom point, this was where you cracked and came down. Now, from the very same low of where support would be on a pullback, would be roughly right here where this diagonal trend line is, which is this short-term support level on the Dow. I am a short seller in 2012 for January, because what has happened is, in every one of these volatile pendulum swings, short, long, and short, and once again another long means going up in value, is that if we fell at any time in here between now and Friday, because everyone's on standby between now and Friday, that's when they're supposed to have, quote, quote, a great solution. Moving on to the Nasdaq comp, is that the Nasdaq comp, once again, is about right there. This is a 200-day moving average. And on the Nasdaq comp composite, bam, reversal, it pulls back, it comes up. This is going to be the top end of that resistance. This right here is the wall of resistance 1. The support level on the pullbacks are going to be here. So this is the amount of short-term ranges that we have available. There were gap sequences that would eventually get filled. And remember that all of your movement and volatility has contributed to Europe and the Federal Reserve. As far as Nasdaq 100 goes, just looks just like the comp. Same thing here. You're above the 200-day simple moving average, but you got a reversal right here. This is where we made last double top reversals. You reverse, you test, and straight down you went, just as you did over here. So basically, buy the rumor, sell into the news, sell resistance, get net short for January. We will conclude that the Dow ended up 52 points in a dirty 30, and Nasdaq comp in minimal pullbacks. S&P is still remaining to close above that 1257 handle, which can get you up to, and we went up to the 1265 because I forgot to show you this. See the 200-day simple moving average? Let me zero that in one more time on the S&P for everybody. Look, you sold up into it yesterday. You sold up into it today. That's that support line going across here. Okay? That's going to be the resistance level. You don't get real constructive until you can consolidate above a daily simple moving average. You got a 2-day buy signal to go with it. But once again, buy the rumor, sell the news. Buy the rumor that Europe was going to do okay in the short term, but then as it becomes more evident on Friday, is selling in and buying net short below the market and selling into the resolution, because just like earnings, learn how to buy the rumor in volatility and sell it in anticipation before the announcement becomes that, hey, Geithner and Bernanke is helping. We own part of Europe, for crying out loud. But the thing about it is, it's not going to be sustainable. So in a short-term trade, I buy the rumor and sell the news.